Hello guys, welcome back to Stacking Stocks and many thanks for joining us today. Are you super excited to tune in today? Well, as usual, we will be making it worth your time. Today, we'll talk about whether NIO should be scared of the EVERGRANDE crisis. Should investors snap up NIO stock before the subsequent Evergrande-inspired sell-off? Let's find out. We established that the China Evergrande Group became a household name for many investors in the week ending September 26, 2021. But what was the driving force behind this? The Chinese real estate giant set off a market panic on September 20th on talk that a potential default on its $300 billion in debt could send ripples through the global economy. This was no good news to investors. By midweek, those fears subsided somewhat, but China Evergrande is still very much a company on the brink. After September 20th scare, investors should remember the risk that comes with buying into Chinese stocks. Some have even become hesitant about jumping in head first. China is going through a period of transition, and investors are right to be cautious. But there will almost certainly be a lot of winners who emerge from this uncertainty. Will NIO stock be a long-term survivor? That's what we're about to find out. Chinese electric vehicle maker NIO has seen its shares take another tumble as of late. On September 20th, NIO stock closed down 6.2% on the day. At this point, NIO stock is down nearly 27% in 2021. For investors, that is a gut-wrenching turn in direction for a stock that delivered a 1,110% return last year. The thing is, unlike in 2019, when a series of bumbles saw shares drop, NIO is doing everything right. Instead, the blame for the poor performance can be found in outside forces. We'll discuss how outside forces are affecting the performance of NIO. For example, the latest was panic over the potential collapse of Evergrande. You're probably wondering why NIO stock would be affected by the fall of a different company. Don't worry, we'll help you figure it out. Evergrande's failure hammered many Chinese stocks on September 20th. NIO stock was just one of the casualties. But the latest drop has left many people asking questions. Is it better for investors to avoid this company for now for fear that the situation will worsen? Or has 2021's ongoing string of events made NIO stock an attractive buy? Electric vehicle makers appear to be a natural champion for China, and NIO is a likely standout among them. Maybe this is good news to investors. Thanks to its charismatic entrepreneur, CEO, and lineup of luxury EVs, the company has long been referred to as the Tesla of China. And at long last, we're beginning to see signs the business is living up to that hype. Things are getting a bit better for NIO. Month after month, the company has delivered EVs at a blistering pace. Even in August, when chip shortages cut production, more on that shortly, NIO's EV shipments were up 48.3% year over year. Its BaaS, Battery as a Service, is proving popular, and the network of battery swapping stations is rapidly expanding. And speaking of expansion, NIO is adding 3 new vehicles to its roster in 2022 and is nearing the launch of its international expansion with a sales center in Norway. It looks like the company is doing quite well than most people anticipated. NIO delivered 21,896 vehicles in the second quarter, more than double the total from Q2 2020. Although the chip shortage impacting all automakers threatened to slow near-term expansion, NIO's agreement with its manufacturing partner gives it the capacity to produce up to 240,000 units annually. Wow! Considering the latest fuss of the company's dismal performance, this is some great news. Does this mean that the silver lining is fading? Should we expect better things ahead? Investors still ask a lot of questions on the fate of NIO stock. As much as the company is gradually recovering, the returns are still not that promising. What does this mean? NIO is not yet profitable, and trading at 12 times sales is not inexpensive. But the company has $7 billion in cash on its balance sheet to ride out whatever blips are on the horizon and continue its expansion in China and into international markets starting with Norway this fall. And the company has established itself as more of a lifestyle brand than a car maker, offering NIO clubhouses where customers can drop in to hang out and selling a line of branded accessories, clothing, and food products. We believe that Chinese consumers, just like their American counterparts, are more likely to favor homegrown brands, assuming those brands can deliver a level of quality and dependability that matches what foreign competitors offer. And what do you think? Does NIO have what it takes to appeal to Chinese consumers? NIO has the brand, and with perks like a lifetime warranty and free roadside assistance, the company is doing what it can to build loyalty. If the company keeps doing everything right, it will undoubtedly deliver outstanding quality to Chinese consumers. Furthermore, we have established that China is committed to going electric, and NIO looks like a top choice to be among the domestic winners. The company has the balance sheet to survive any crackdown on corporate debt, and vehicles are a good way for China to extend itself globally without giving away precious domestic data or running afoul of foreign privacy laws. NIO looks like the right company at the right time as China works through its growing pains. The most critical factor in a company is being able to settle debts, and if NIO is financially secured, then we don't see why it should fail any time in the future. Generally, outside factors seem to be the hindrance towards NIO's success. Look at the situation on September 20th. The drop was attributed to China Evergrande Group. NIO does everything right to improve its production and sales. That way, investors get the confidence to splash their money on the stock. But that's beside the issue at hand. The question is, will NIO continue the downward trajectory, or is a recovery imminent? Going by historical performance, there is an equal chance of a rise or fall in NIO stock over the next month. Out of 279 instances in the last 3 years that NIO stock saw a 21-day decline of 5.5% or more, 142 of them resulted in NIO stock declining over the subsequent 1-month period, 21 trading days. This historical pattern reflects 142 out of 279, or about a 51% chance of a drop in NIO stock over the next month. But this does not erase the remaining percentages of the number of times NIO has recovered from a decline. You can never be too sure about the expected outcome while basing your factors on historical performance. Although NIO posted weak August delivery numbers, which dropped about 26% from July to about 5,880 units on account of some supply chain constraints, things are set to look up. NIO's quarterly guidance of 22,500 to 23,500 vehicles for Q3 2021 implies that deliveries for September could jump to over 9,000 vehicles, marking a monthly record. This could indicate that NIO is finally tackling the ongoing automotive semiconductor shortage, which has impacted production across the auto industry. So will NIO stock continue to rally, or is a decline looking more likely? Should long-term investors consider NIO stock? We think that they probably should. Although NIO stock trades at a relatively high 12-time consensus 2021 revenues, it should quickly grow into this valuation. And this is what matters most amongst many investors: the ability to grow. Now, this brings us back to the question of whether you should take advantage of the current weakness in NIO stock. NIO has considerable long-term growth potential, and it's currently at a 40% discount compared to its February high close. We believe that NIO is on the right track, and shares will reward investors with long-term growth. However, given the current events in China and NIO stock's vulnerability to outside factors, you need to be prepared for some potential short-term volatility. In fact, you may want to see how the China Evergrande Group scenario plays out before pulling the trigger. It's better to play safe than feel sorry later. Nonetheless, we'll keep you posted. Just hit the notification bell for updates. Once again, we are grateful for tuning in today. Don't forget to like, share, and subscribe. Until next time.